Hey guys, this is Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. Guys, I wanted to jump in and make a video really just trying to explain what on earth is going on with the stock market right now. So we're going to be talking about everything you must know before you guys invest. We're going to be talking about banks. We're going to be talking about the debt ceiling. We're going to be talking about pretty much everything you must know. So I hope you guys all enjoy it. Unedited, raw video again. I really like making these just to try to express my emotion to you guys. And if you guys get anything of value, hit the like button, subscribe, join the team, join the club. So let's jump into this one. So what's going on? Well, right now, I think we all know the banking sector has been absolutely obliterated. Today in general, we've seen SoFi, sell off 10%. We saw JP Morgan sell off 2%, Bank of America sell off. Most banking stocks sold off today. Now, why is that, you may be asked? One, emotion. We've seen so much volatility among, First Republic, Silicon Valley, we saw Signature, all these banks either closed or almost closed or got bailed out. Anytime you have that, it's gonna cause most people to say to themselves, is my money safe? Is my money safe here? And if you have money invested into banks, you're gonna wanna sell it. If you have money invested anywhere, you're gonna get nervous and you're gonna want to sell just because cash is king, especially in a recession. So that's kind of what's going on a little bit in the banking. Also, banks, when interest rates were really, really low, banks bought a ton of bonds. It made sense. Most banks and wealth management, they buy bonds to almost hold it like a little bit in cash, so if something happens, you can sell those bonds. So what happened was, as these interest rates go up, those bond values go down and become less and less, worth less and less and less. Now, the issue is if you didn't sell, you're out billions of dollars. And that's kind of what these banks realized, is they lost a lot of money from these buying bonds. Now, obviously, if you're a long-term investor, most wealth management, companies and people will say, all right, well, we're just gonna hold this for the long run. The issue is, one, income statements. You gotta show this to your investors. Once you put that out there, you're gonna have people wanna withdraw money, and you're gonna just see a lot of emotion coming into that bank. Also, guys, anytime you see these interest rates go up, what happens? It slows the economy down. The reason why is because people are less likely to buy a house, buy a car, which slows the economy, but it cools down inflation. So it's a catch-22. It's a win-lose situation. Now, that's a reason why we saw Tesla down, Ford down, all these automobile companies, because people aren't buying cars right now. It's a slower time. But also, we're seeing this, just to add on top, we're seeing the Fed enter a two-day meeting whether they're gonna decide if they need to increase these rates again to cool down inflation. I don't know what's gonna happen. It's better to just sit on the sidelines, honestly, in situations like this, because we can see a squeeze going up or a squeeze going down. If you're a long-term investor, do what I do, just invest weekly and you'll be all right. Don't worry about these day-to-day and all this news and all this fear, emotion. Don't worry about it. Just invest for the long run. You'll be okay. Now, during that meeting, I think that most likely we'll probably see an interest rate go up a little bit, but don't panic too bad. We've seen interest rates like this before, and as long as you have a long-term mindset, you'll be all right. Not to mention, just to put more stuff into the mix, conflict overseas. Obviously, we're seeing tensions with Russia, with China, Ukraine, all that situation. Anytime you have that, it's gonna cause fear, cause emotion into the market. People are less likely to invest. People wanna hold their cash during times of conflict, as well as oil prices, gas prices normally go up. I'm sure you guys noticed at the pump. Now, is that an issue? Well, I mean, it is and it isn't. Right now, Russia and Ukraine, it's kind of like their own war, and really the U.S. is just kind of funding it and, giving them some military, weapons and stuff like that. So, all right, let's move past that. We understand there's conflict, let's move past it. Now, the debt ceiling. Just to put more stuff, put that cherry on top, Carter, put the cherry on top of everything going on. Right now, the debt ceiling needs to either get stunned or raised. Now, the reason why, and pretty much what the debt ceiling is, the debt ceiling or the debt limit is pretty much the debt that runs the government. Now, the issue is the U.S. spends a lot of money. When you spend a lot of money, you need to increase that debt And anytime you have that, it's going to stun the economy, slow it down, just because the US, our general economy, is taking on more debt, which is going to slow things down. So I definitely think right now, if you're undecided whether you should invest, I think it all comes down to time frame. You know, I think that's very, very important. If you're looking to make money quick, I'll leave the video. If you're looking to make money in the long run, guys, looking back at just previous history, understand that this stuff happens. I hate to say it, but it does. History repeats itself. Looking back, you know, over the past 90 years, through all the wars, the Great Depression, through the dot-com bubble, through the pretty much the slowdown in the 70s, through the 2008 crash, the S&P 500 has had an annual return rate of 9.8%. So as long as you have a long-term outlook, just invest. Invest for the long run. You know, compound your money. Sign up with Drip to get those dividends reinvested, and you guys will be all right. You know, obviously this is just all my opinion, but you know, I just think that right now, yes, we're seeing just a lot of volatility, a lot of volatility, but also some opportunity. You know, we've seen some stocks sell off a little bit. We're seeing, you know, these very, very affordable companies that were once $400 or $500 a share, now $200 a share or $100 a share. And the thing is they're still bringing in billions of dollars, increasing revenue. Guys, I hope you guys all enjoyed it. I hope you guys learned something. If you guys did, hit that like button, subscribe. Like I said, unedited, raw. I just want to put myself out there to you guys. If you have any questions, let me know down below, and we will see you guys tomorrow in another episode. Take care, guys.